Hello, in this lesson, we will discuss the selection of grid strategy price ranges with a special focus on buy grids. First, let's review the key points covered previously. The core principle of grid trading is sell orders are always placed above the current price, and buy orders are always placed below the current price. Just remember this point. So, what happens when the grid goes out of range? When the asset price exceeds the upper limit of the grid range, meaning when it breaks out upwards, all orders in the strategy become buy orders. When the asset price drops below the lower limit of the grid range, meaning when it breaks out downwards, all orders in the strategy become sell orders. Let's take the ETH-USDC pair as an example. When the grid breaks out upwards, the holdings are all converted to USDC, meaning all ETH is sold into USDC. When the grid breaks out downwards, the holdings are all converted to ETH, meaning all USDC is used to buy ETH. Let's look at an example of a real grid strategy going out of range. On the left is an upward breakout grid. At this moment, all holdings are in USDC and all orders are buy orders. On the right is a downward breakout grid. At this moment, all holdings are in the coin, and all orders are sell orders. The choice of grid range depends on your goal. We should decide the grid range based on our current objectives. There are roughly 3 types of range choices. Sell grid, using the grid strategy to sell coins to achieve profit. Buy grid, using the grid strategy to buy coins, aiming for gradual position building. Neutral grid, neither biased towards buying nor selling, aiming to generate grid profits through price fluctuations. In this lesson, we'll discuss the neutral grid. What's the purpose of a neutral grid? A neutral grid can earn passive income during periods of fluctuation. It doesn't rely on subjective judgments of market direction and earns passive income through buying low and selling high in grid trading. Grid profits can also lower the average cost of holding positions. Let's see what a neutral grid looks like. In a neutral grid strategy, buy and sell orders are symmetrically distributed above and below the current price. The deviation of the highest and lowest ranges from the current price is roughly the same. For example, the lowest range is 5% below the current price, and the highest range is 5% above the current price. Of course, the deviation doesn't need to be exactly equal and can be flexibly adjusted according to market conditions. Let's look at a real case of a neutral grid. This is an ETH-USDC grid strategy. The initial investment was 2 ETH and 1,762 USDC. The current balance has 2.4 ETH and 501 USDC, showing that this strategy has bought some ETH. The grid profit generated by this strategy is over 3,000 USDC, which already exceeds the initial 1,762 USDC investment. Since grid profits accumulate continuously and only increase when grid profits exceed the initial USDC investment, it means the additional ETH in this strategy is essentially free, with zero cost. Grid profit is pure profit. This is an example of how a neutral grid reduces holding costs. Now, using the ETH-USDC trading pair, I'll show you how to set up a neutral grid. From this daily chart, you can see that ETH has been fluctuating in the 3,000 plus range for some time. The current ETH price is around 3,160, and I don't know if it will rise or fall in the short term. In the past 6 months, ETH's highest point was around 4,000. We can draw a line here to mark it. The lowest point was around 2,200. The current price of 3,175 is at a certain distance from both the upper and lower limits. The range of 2,200 to 4,000 can be the range for this neutral grid. Or, if I want a narrower range to amplify short-term grid profits, we can see that 3,500 appears to be a resistance level. For the lower limit, we can choose around 2,900, which seems to be a support level. If we choose an even narrower range, we can set the lower limit at 2,900 and the upper limit at 3,500. The current price of around 3,100 is at a certain distance from both limits, so this can also be our grid range. Okay, we'll choose this narrower range. I'll remove the lines from the chart to make it look cleaner. We've chosen a range with a lower limit of 2,900 and an upper limit of 3,500. Now, I input this range. Regarding the choice of investment currency, it depends on your situation. If you choose to invest only USDC to open the grid, it means you'll buy some ETH at the current price when the strategy starts. If you already hold a TH, you can choose to invest both ETH and USDC to open the grid. In this case, the invested ETH is used for sell orders, and the invested USDC is used for buy orders. In this video example, I'll use USDC to place orders. Now I'll choose to invest 1,500 USDC. On the preview chart, we can see that the number of red sell orders and green buy orders is roughly the same. The current price is in the middle of the upper and lower limits. Let's check the grid parameters provided by the system's 60 grids and the profit per grid. If I'm satisfied with these parameters, I can click to create the grid. Let's preview the parameters of the strategy we're about to start and the orders we're about to place. Click Confirm. Okay, now the ETH USDC grid strategy is set up. In the Strategy Details window, we can view the orders for each grid of this strategy. In the history, by clicking the other box, we can see the amount and price of ETH bought at market price when the strategy was started. The ETH neutral grid is now set up. Let's summarize the key points of the neutral grid. A neutral grid earns profits through price fluctuations within the range. Grid profits can lower the average holding cost, even to zero. When setting the price range, the current price should have a certain distance from both the upper and lower limits. Alright, that's it for this video. See you next time.